Danny Blanchflower right now for a little bit more on these poll results. He is an economist. He is joining us from Dartmouth. He is also a Bloomberg contributing editor. He is an advisor to the Boston Fed, and he is with us from New Hampshire this morning. Danny, great to see you. Dom just brought us the statistic. 74% say Bloomberg poll shows investors around the world think recession is coming in Europe in the next few years. Germany, though, just saying yes to the expansion of the EFSF. What do you think?
Well, I think they're probably right. The world's looking a pretty gloomy place. Despite the fact this morning Germany votes in favour, I guess I saw a reaction which I sort of agreed with, which was too little, too late. I mean, it's a start, but they're going to have. We're talking not 450 billion. We're now talking in the trillions. And I think an interesting result, which also came out, completely confirmed the Bloomberg survey, was the EU confidence number, consumer confidence falling, business confidence falling as well in Europe, including in Germany. So I think the Bloomberg polls got it right. Europe does look front and centre. The fiscal tightening we've seen there and the raising in interest rates and the financial shenanigans that are going on are bad for Europe, but they're bad for the world. And they just don't look, even the German steps today don't look enough.
Danny, as you know, markets have been leading policymakers in Europe for months now.
Right.
And if we use the investor poll as a proxy for what might happen in the markets, the investors say they consider the EU to be the least attractive investment region over the next 6 months, 53% a majority. They're raising cash, 42% say they're increasing the cash balance in their portfolios. And they think that U.S. equities have entered a bear market. So bad for equities, bad for Europe, cash percentages going up. What's that going to mean in terms of how markets are leading policymakers?
Well, markets have led policymakers in Europe throughout this crisis. What's happened is that I've called it the economics of dither. Dither and deny. Do nothing, and then the markets force you eventually to do something. But that's been the history over the last 2 years. And the markets kind of know if they create a crisis, and eventually what you'll see is the policymakers will respond at the last gasp. So this is really not sensible policymaking. I've said on this program several times, policymakers are supposed to, like doctors, to do no harm. And these European politicians look absolutely hopeless. Go back. The central bank raised rates twice this year, did the same in 2008, and that's made the crisis worse. Well, so it doesn't really look great for policymakers.
Well, Danny, Erik and Deirdre and I were sitting here in the commercial break. We went through another couple poll results here on the more positive side. So I just want to give those to you here. When asked which of the following has done a better job of handling the problems facing its economy, a whopping 67% said the U.S. has done the best job handling its economy versus other countries around the world. Also, they're saying that 51% of respondents think that the Eurozone will eventually adopt a common fiscal policy. Are any of those realistic to you? Are they reasons for a little bit of cheer in all this gloom?
Well, I think they are. I agree with that. I mean, if you look now at the growth data, despite the fact that the U.S. we've seen slowing, we worry, and Bernanke talked today about we worry about the levels of unemployment. Growth in the U.S. looks better going forward. It looks slow, but it doesn't look like we're going to see quarters of negative growth. We certainly do look that way in many of those European countries who are already in recession. It certainly looks that way in the UK. They've only had growth of 0.2% over the last 9 months or so. But I guess the worry as well is the IMF has showed declining growth forecast in every country pretty much. So I think it's probably right. The US does look as if it's going to do better than the UK and Europe. But the example from Europe is fiscal tightening hasn't worked. It's slowed growth dramatically.
Danny, we thank you as always for your insight. Danny Blanchflower joining us there, professor of economics at Dartmouth College, a Bloomberg contributing editor, and an advisor to the Boston Fed.